So in our session now, we're going to be discussing the November 2022 RTP for corporate and other laws. We'll be seeing the MCQs first, and then we'll go to the descriptive questions. It is not a very complicated RTP. The questions seem to be more or less, simple. The case study based scenarios also are not very complicated. They're reasonably easy. Let's begin. Let's begin with the first case study based MCQ. Let's see what exactly the question is telling us. Shree Tiles Limited is an unlisted public limited company. The company's accounts for the financial year ending on 31st March 2022 were finalized and audited by the statutory auditor. Meeting of the board of directors was convened and approved the financial accounts of the company and proposed to convene the AGM of the shareholders on Thursday, 25th of August 2022 at 10 a.m. So the question is talking about AGM. Please notice the question tells us that the AGM is going to be held on 25th August at 10 a.m. Total number of members is 3,500. See, it's an unlisted public company and it has totally 3,500 members. So what will the quorum of this company's meeting be? What's a slab? For private companies, quorum is 2. For public companies, quorum depends upon the number of members, right? If I have up to 1,000 members, then 5, very good. If I have more than 1,000, but up to 5,000, then 15. And what if the number of my members is even more than 5,000? It's going to be 30. This is for public companies. For private companies, it's a simple number 2. So it has 3,500 members, which means between 1,000 to 5,000. So the quorum will be 15. But the articles of the company provides that the quorum for the general meeting of the shareholders shall be 50 members. Is that allowed? Our Act is saying 15. Can the AOA say 50? Yes, the AOA can prescribe for a bigger quorum allowed. On the date of the meeting, only 10 members were personally present. So, which means we don't have quorum. Even after waiting for half an hour, the quorum was not present. Now, what happens in such cases? The meeting automatically gets adjourned to same day, same time, same place in the next week, or some other date, time, place which the board will decide. According to the provisions of the Companies Act, the meeting shall adjourn to same day in the next week, same time and place. However, on the same day in the next week, that is Thursday, 1st September, the same venue, which is Hotel's Conference Hall, was available from 3 p.m. only. So same day, same time, same place next week would be next Thursday, 25th August 2022. After 7 days, next week would be 1st September 2022. But we had decided to hold the meeting at 10 a.m. So it should be next week also at 10 a.m. But next week, the hall is available only from 3 p.m. only. So in such cases, can we have the meeting at some other time? Yes, remember who will decide that? The board will decide that. So accordingly, the board agreed to conduct the meeting from 3 p.m. All the members were informed individually via mail and also published it in the newspapers, one English and another vernacular newspaper. So listen, generally, once the quorum is not present within half an hour, the meeting automatically gets adjourned to same day, same time, same place in the next week, or some other date, time, place, which the board may decide. So understand that yes, the board does have the decision-making power. The board can decide that the adjourned meeting will be held at some other time and place. So accordingly, they have decided not to have the meeting at 10 a.m., instead having the meeting at 3 p.m. Nothing wrong in that. Right? Now tell me, for this adjourned meeting also is a notice required? For the adjourned meeting also, do we need a notice? Yes. How many days notice? 3 days notice. And what if it is not possible to give this notice? Then we can simply give it as an advertisement in 2 newspapers, one English and one vernacular newspaper. You know that. Then they say the adjourned meeting started at 3 p.m. on 1st September 2022. Quorum required as per the articles was 50. 75 members were present. Good. We need 50 members. 75 members were present within half an hour. What if the quorum was not present in the adjourned meeting also? Then what will you do? The law says if the earlier meeting was adjourned because of lack of quorum, in the adjourned meeting now, even if I don't have quorum, how many ever members are present, that itself is quorum and I can go ahead with the meeting. Right? I'll repeat once again. The law says if the earlier meeting was adjourned because of lack of quorum, in the adjourned meeting, even if I have lesser number of members, in the adjourned meeting, even if I don't have quorum, how many ever members are present, we assume that itself is quorum and we go ahead with the meeting, right? But what if the earlier meeting was adjourned because of some other reason? For example, because of lack of time, the old meeting was adjourned, earlier meeting was adjourned, then in the adjourned meeting, we need quorum. In this adjourned meeting also, if there is no quorum, then we adjourn the meeting once again. Clear understanding? So when do we disregard quorum in the adjourned meeting? Only if in the earlier meeting, adjournment happened because of lack of quorum. If earlier meeting was adjourned because of lack of quorum, then in the adjourned meeting, even if we don't have quorum, it's okay. How many ever members are present, that itself is quorum and we can continue. But in this case, all this not applicable. In this case, adjourned meeting quorum is there. Out of 75 members attending the meeting, 25 persons were having the residence near the venue of AGM and rest of the members were staying far away. Due to heavy rainfall and scarce availability of public transportation, 40 persons left the meeting so that they can reach home on time. You know about this provision. Quorum should not only be present before starting the meeting, quorum should also be present before each item of business. It should be present before each item of business. Otherwise, that particular item that was discussed without quorum, those items, those transactions will be void. Right? See, when I start the meeting, I must have quorum, because only when we have quorum, we say that the meeting is validly constituted. Only then we can transact business at the meeting. Only then we can start the meeting. But not only should quorum be present before we start the meeting, quorum should also be present before each transaction, before each item of business. So when these 40 people left, do you agree if the 40 people left, then we don't have quorum? Because our quorum as per AOA is 50. Out of 75, if 40 people left, we are left with only 35 people now. We don't have quorum. By that time, only ordinary business resolutions were approved. 2 special business agendas were pending for approval. What will you advise the company? Can the company go on with just 35 members for the balance 2 special business matters? No, because we need quorum before each item of business. Okay, so the story is clear. Now let us look at the questions one by one. In the light of the given facts, general meeting of shareholders was decided to be scheduled. Determine by which date notice to the shareholders should have been given to the members. They are asking us to tell them when should the notice be given. See, when is the meeting going to be held? On 25th August 2022. How many days notice is required? How many days notice is required? 21 days notice is required. And we also say clear days, 21 clear days, which means I will ignore the date on which I'm serving the notice. I will ignore the date on which I'm going to hold the meeting. In between, I need clear 21 days. In case I'm sending by post, then I'll assume that the notice got served only after 48 hours from posting. So in that case, in case I'm sending by post, then I should remember 21 clear days and I should remember 48 hours, that is 2 days for the post to reach. But does this question talk about sending the notice by post? No, which means I can disregard the 48 hours criteria. So I will consider only one criteria, which is 21 clear days, right? So 25th August, the meeting has to be sent. If I subtract 21 days, that's going to be how many days now? 4th of August. Will 4th of August be the correct answer? No, because when we do this, we are considering one of these days, but we are supposed to consider 21 clear days. So I will subtract how many more days? One more day I will subtract, and that's going to be 3rd August. So 3rd August will be the day on which the notice has to be served. 3rd of August. You understood? 25th August, the meeting is going to be held. I will subtract 21 days because 21 days notice has to be given. That's going to be 4th of August. But 4th of August will not be 21 clear days. I will subtract another one because I'm supposed to ignore the date of service of notice and the date of meeting in between 21 clear days. So I'll have to subtract one more day. So which means it's going to be 3rd of August. When I simply subtract 21, I am considering one of the 2 days, either 25th or date of notice, at least one of the 2 days I'm considering. So that is why we subtract another one, because 21 clear days. How do you check whether your answer is right? See, here they asked for a backward calculation. But generally, how do we check our answer? See, if I'm going to give the notice on 3rd August 2022, between 3rd August and when is the meeting going to be held? 25th August. In between these 2 days, how much gap do you have? Tell me. 25 minus 3, 22 days. 22 days gap we have. All right. But then I want you to calculate that gap, both days included. So if I'm going to include both the days, the gap is going to be 23 days. I want you to tell me 3 minus 25, in between how many days? Both days included. That's going to be 23 days, right? Don't count in your fingers and all. 3 minus 25, 22. Add another one because I want you to include both the days. 23 days. Now I will ignore 2 days. Why will I ignore 2 days? 1 day for serving the notice, 1 day for meeting. I will ignore these 2 days. So this is going to be 21 days. 21 days notice we need minimum. 3rd August is correct. All right. The same question, if they had said that the notice will be sent by post, then what would you do? In that case, how many more days you would have subtracted? You would have subtracted 2 more days, because for sending by post 48 hours, we assume that the post has reached only after 48 hours. That is 2 days. So in that case, our answer would be 1st August. So in those situations, how will we test now? How will we check? 1st August, we are sending the notice. Meeting is going to be held on 25th August. In between, how much gap, including both the days? Including both the days will be 25 days gap, including both the days. Then I will subtract 2 days because I'm supposed to ignore the date of service of notice. I am supposed to ignore the date of meeting. Then I'll subtract another 2 days because post takes 48 hours to reach. So now how many days will I have? 21 days, which is again criteria fulfilled. Okay, so had the question asked you about post, then your answer would have been 1st August. But because the question doesn't talk about sending the notice by post, I will also not apply the 48 hours criteria. First situation crystal clear? Yes, you understood how we did the backward calculation. 25th August, the meeting is going to be held. I need to send the notice 21 days in advance. So I'll subtract 21 days. But if I subtract 21 days, I am considering at least one of these 2 days. So I will subtract another 1 day. It's going to be 3rd of August. And this is how we checked whether our answer was correct. 3rd of August is the right answer here. I'll proceed forward now to the second question. Whether adjournment of the general meeting of shareholders of Shree Tyres Limited for want of quorum was justified as per the requirements of the Act. Even without looking at the options, tell me whether adjournment was justified. They adjourned because of lack of quorum. Yes, they adjourned only after 30 minutes. They are supposed to wait for 30 minutes. Within 30 minutes, if the quorum doesn't arrive, only then they are supposed to adjourn. And they did exactly that. They waited for 30 minutes. So which of the 4 options is right? It definitely can't be no. One of the options A, C, D. Yes, it was justified since the quorum was not present within 30 minutes from the time appointed for holding the meeting. That's clearly the correct answer. Then you try answering the third question. What shall be the quorum for the general meeting of shareholders when the number of members is 3,500? What will your answer be? Generally, if it is 3,500, your answer will be 15. Yes, because more than 1,000 up to 5,000 we just discussed, the quorum is 15. But in this question, what will your answer be? It will be 50. Right? See, because AOA has clearly mentioned that the quorum should be 50. AOA can mention a bigger number. Can AOA say, no, in our company, 10 itself is enough? That is not allowed. AOA can't be lenient, but AOA can be stricter. AOA can ask for a bigger number. In that case, a bigger number will apply. If this question had come separately as a standalone question, see, then we would have answered it as 15. But keeping this question in our mind, the answer will be 50 because it's going to be 15 or the rate mentioned in the AOA. If the AOA mentions a higher rate, we will consider the AOA number. All right, that is it with the third subdivision. Coming to the fourth subdivision, as some of the members left the meeting, quorum was not present all the time during the AGM. Agendas for special business transactions remain unapproved. What is your opinion? We know the answer already. What is our opinion? If quorum is not present before any specific business, those businesses can't be transacted. If I still transact those businesses will be void. Let us see the four options. Let us choose the correct one. Quorum once present in the beginning of the meeting is enough? No, it should be present not only at the beginning, it should also be present before every item of business. Quorum should be present all the time when the meeting is in progress. Any item which could not be approved by members for want of quorum shall be treated as nil. Looks right? Let us see the other two options. When the quorum is present in the beginning of the meeting, it may be assumed that all the resolutions have been approved. This definitely sounds wrong, right? Because just because quorum is present, we can't assume all the resolutions are approved. And then board may seek special written consent from all the members later on. No. So the correct answer is option B. Quorum should be present at all times. If before any matter quorum is not present, then that matter will be treated as null and void. All right. So this is it with our very first case study. This case study was all about general meetings and quorum. Simple. I think the biggest thing that we had to learn through this question was the notice calculation, the 21 days calculation. This 21 days calculation can either be a part of your MCQ questions, or they can also ask you a full-fledged, 3 or 4 marks question asking you to calculate the date. Or they can give you the date of sending the notice and they can ask you, is the notice valid or not? So you'll have to check whether 21 clear days are there or not. So this notice period calculation is extremely important. I hope you all understood. I will leave the date of the meeting. I will leave the date of service of notice in between 21 clear days. So I'll see the gap between the 2 days, both days included. I will subtract 2 days for the date of service and date of meeting. Then if it is sent by post, I will subtract another 2 days. Balance number should be at least 21. Only then it is a valid notice. All right, this is it with our first MCQ, first case study based question. Let us go to the next question now. Yukti has opened a showroom of electronic goods, air conditioner, color TV, refrigerator, washing machines, etc., which are commonly used for household purposes. She also has a godown in which the white goods are stored. Since the electric items are costly and require heavy investment, she availed a working capital finance from OK Bank Limited, the bank, by pledging the white goods lying in her godown with the bank. Which concept is applicable here? Electric items are costly and require heavy investment. So she availed a working capital finance from OK Bank Limited, the bank, by pledging the white goods lying in her godown with the bank. Which concept comes to your mind? Come on, don't tell me charge. It's an individual. So it has to be pledge, right? Special contract pledge is going to be applicable here. Is pledge applicable for working capital loans also? Yes, applicable. Can be for business loans also, can be personal loans also. In pledge, nothing but I am giving the possession of my goods as security to the lender, to the pawner, to the pawnee, under the condition that once I return the loan, once I return the interest, once I return the expenses, he will return the goods back to me. Under pledge, can I create, can I give an immovable property as pledge? Can I pledge an immovable property? No, it has to be movable goods, because if I pledge an immovable property, it becomes a mortgage, and mortgage will go under the rules and regulations of TOPA, Transfer of Property Act, right? So under pledge, we're talking only about movable goods. And one more thing excluded is money and immovable property excluded. Anyways, coming back to the question, the bank put its lock on the godown and whole of the white goods whole of the white goods were now in possession of the bank. The bank granted a working capital finance of 100 lakhs to Yukti by keeping the pledged goods. The drawing power limited was kept at 60% of the value of the goods pledged. So the banker has taken possession of the goods of the stock in trade of Yukti and has given working capital finance of 10 lakhs. Please notice the goods are not physically transferred from Yukti's place to the banker's place. Instead, what did the banker do? The banker put its lock on the godown and whole of the white goods were now in possession of the bank. Does any concept come to your mind just by looking at that sentence? The goods were not physically moved from Yukti's place to the bank's place. The goods were earlier in the godown, even now they are in the same godown. What kind of delivery has happened here? It is constructive delivery. Very good. Then the bank granted a working capital finance of 100 lakhs. Okay. As and when Yukti needs to withdraw some white goods from the godown, she requests the bank, deposits the value of goods to be withdrawn. A godown keeper of the bank comes with her, opens the lock of the godown and allows Yukti to draw the specified goods of which she has made the payment to the bank. Fine. As and when she needs money, she repays a little bit of the, as and when she needs the goods, she repays a little bit of the loan and she gets the goods back from the banker. Banker got the comprehensive insurance policy on the value of the goods pledged to cover it from theft, fire, flood and earthquake. The banker has taken an insurance policy on the security. This is something which banks generally do. This is a general knowledge point. Whenever I give any asset as security to the banker gets it insured. Yukti, after some time, availed another loan of 20 lakhs from the same bank for her sister's marriage. This was a personal loan and no security was insisted by the bank. So do you agree if I call this as an unsecured loan? Yes, there is no pledge over here. Tell me, in case Yukti does not repay this loan, for the non-repayment of this loan, can the banker retain the goods, the stock in trade in the godown? No, that the banker can do only if the banker has what kind of lien? That the banker can do, the banker can retain the stock in trade for this loan only if the banker has general lien, right? And general lien, will the banker have automatically? No, general lien the banker will have only if it is specifically mentioned in the contract. Till now, we did not see anywhere any general lien. Okay, going forward, Yukti hired a locker from the bank in which she kept some jewelry which was to be given to her sister on her marriage. After a year, Yukti decided to transfer its running business to Shekhar, for which Shekhar paid the amount to Yukti as agreed between them. So Yukti is now selling her business to Shekhar. Yukti thereafter repaid all the outstanding loan amount given by the bank towards the working capital finance. See, she has repaid the loan, okay? And she's asking the bank to open the lock of the godown to get the goods to hand over the same to Shekhar. She's repaying the loan and she's telling the banker, release the pledge, give me my goods back. When will the banker give the goods back? If you remember, in the rights of the pledgee, what did we learn? Rights of the pledgee, rights of the pawnee. We said, when will he return the goods to us? He has the right to retain the goods till we don't repay him the loan, interest on the loan, and also ordinary expenses. You remember learning that flow chart with 3 points, right? So in case I do not, return any of these 3 things, the banker will not release the goods. The banker, the pawnee, the pledgee has a right to retain my security till I don't return to him the loan, interest on the loan, and also ordinary expenses. Answer my question. Can he retain my goods for extraordinary expenses also? No. For extraordinary expenses, he can sue me, but he cannot exercise lien. He cannot retain my goods for non-payment of extraordinary expenses. Answer my next question. Can the banker retain my goods for non-repayment of subsequent loans also? For non-repayment of other loans? For non-repayment of other loans, he can retain these goods only if he has general lien. Only if he has general lien, he can retain my goods for other loans also. Only if he has general lien, and general lien he'll have only if it is specifically mentioned in the agreement. Okay, Going to the next point now. However, there was some dispute over the insurance charges paid by the bank. Bank insisted to first pay the interest amount, then only it will allow her to remove the goods. Is the bank right? Can the bank retain the goods for non-payment of interest? Yes, the bank can retain the goods for non-payment of interest. Can the bank retain the goods for non-payment of the insurance charges? Yes, because even that's going to be ordinary expenses. For ordinary expenses, for interest, and for loan repayment. For these three purposes, the banker can retain the goods. So for interest amount, yes, the banker can retain the goods. Going forward, the bank also asks Yukti to settle her personal loan account, and only thereafter the bank will allow to take the goods lying in the godown. Is this right? This is definitely not right. Banker, you can't do that. You can't keep Yukti's goods. You can't keep the pledged goods for subsequent loans unless you have general lien. And clearly in the question, you don't have any general lien. So you cannot keep Yukti's goods for subsequent loans. Entire story is clear. Yes, I think almost the entire pledge concept has been revised through this discussion. Now look at the MCQs. In the light of the given facts, state which statement is correct as regards right of the bank on retaining the goods lying in the godown. Which of the statements is correct? Let's see them one by one. When the outstanding amount taken for working capital has been paid, the banker cannot retain the goods. Second, the bank can retain the goods till all the charges, including interest, insurance, and other charges, are paid by Yukti. The bank can retain only a portion of the goods to cover its dues and may release the rest of the goods. See, third option is definitely wrong. Bank may first release the goods and then for recovery of dues file suits against Yukti. This is also wrong because the banker generally releases the goods and files a suit only for extraordinary expenses, right? And here we're not talking about any extraordinary expenses. So out of the first two options, choose and tell me which of the two options you think is better. Definitely option B. Bank can retain the goods till all the charges, including interest, insurance, and other charges, are paid by Yukti. Insurance is an ordinary expense. Generally, I told you, whenever we pledge goods with the banker, it's a normal business practice to take an insurance policy on the security. So insurance charges will be ordinary expenses. Interest is anyways covered in that list. So not just the loan, not just the outstanding amount, interest, other charges, everything has to be paid. Only then the banker will release the goods. So option B. Coming to the second question, if in the given case, Yukti pays all the expenses, including insurance premium, let us say Yukti has paid, but the bank insists to clear the personal loan account also, then only it will release the goods. Determine whether the bank is entitled to do so, even without looking at the options. Tell me, can the banker say, repay the personal loan also, only then I will return the goods? See, banker, you could have said this if you had general lien. You do not have general lien, so sorry, you cannot retain her goods for subsequent loans. So which of the four options is right? Bank can do so, no. Bank can sell part of the goods, no. Bank can ask shaker to give guarantee, no. The bank has no right to retain the goods pledged with it, since a personal loan was not taken on the security of such goods. Option B. Able to follow, right? Then coming to the third question. Yukti disputed the amount demanded by the bank towards the insurance premium paid by the bank. Yukti emphasized there was no need to take the insurance policy on the goods pledged because it is an extra burden on the part of the borrower. Identify the correct statement. This question here is nowhere connected to the special contracts chapter which you have studied. This point about insurance policy you would not have studied anywhere in your syllabus. This is just a general common sense kind of a point. Any case you see, whenever you pledge your goods with a banker, it is normal business policy that the banker will take an insurance policy on the goods. No doubt, because of this insurance policy on the borrower, on the pledger, there will be extra burden. He'll have to bear the insurance charges. But this is normal, common business practice. So hence, is Yukti right? Yukti saying I will not pay the insurance premium, is Yukti right? No. So which of the four options is right? Let us see. Yes, it is an extra financial burden. No. We can't call it an extra financial burden because it is something which is a common practice. Every bank has a policy to get the security insured on which it grants loan. So in this case also, bank for the purpose of protection of the goods took the insurance policy and paid the premium. So the demand of the bank is justified. Looks like the correct option. Still, let us see the other two options also. Godown is just nearby the police station, hence there should not be the fear of theft. This is of course not the right answer. Happening of earthquake and flood are remote possibility. Expenses on insurance premium could have been avoided. No, even this is not the right answer. Because if you see over here, if you look at what's written over here, see, the bank got the comprehensive insurance policy on the value of goods pledged to cover it from theft, fire, flood, and earthquake. This is a very common business practice. This is something which the banker anyways does in every case. So option B. The last question is a very simple question. When Yukti is availing the working capital finance from the bank on the security of white goods, by submitting these goods in the custody of the bank, said course of transaction can be termed as what? Obviously, we know this, pledge of goods. If you get a question like this, it's as if the examiner is saying, come take marks and go. Right? So that is it with this question. This question was all about pledge. Constructive delivery, they did not ask us in the question, but had they asked us, we know this is constructive delivery because the goods are not moving from one place to another. Earlier, the goods were in the godown, they are still in the same godown. Just that the banker has locked the godown and taken away the keys. You know very well, whoever has the keys, only that person has the possession. Remember in bailment, we discussed about this, the locker example, the car example, the car parking example. So the banker has locked the ground and taken away the keys. So even though the goods did not move even an inch physically, even though the goods are still where they were, it is still going to be a case of constructive pledge, right? Because the banker has locked and taken away the keys, so banker has the possession. All right, guys. So this is it with the case study based MCQs. Let us look at the other MCQs. A clause that begins with the words notwithstanding anything contained is called what? Interpretation of statutes question. Notwithstanding anything is called non-obstante clause. Non-obstante clause, notwithstanding anything contained, indicates it's a very powerful section, indicates it's a dominant section. It will dominate all the other sections. So non-obstante clause. Then this is a trick question where a share capital of the company is divided into different classes of shares. The rights attached to the shares of any class may be variation of rights, with the consent and writing of holders of not less than dash of the issued shares of that class, or by means of a special resolution passed at a separate meeting of the holders of the issued shares of that class. For variation of rights, you need written consent of how many shareholders? See, it's definitely not 1/4, definitely not 50%. Confusion will be either 3/4 or 75%. No doubt both mean the same. We'll have to follow the legal language. What does the law say? The law says 3/4. So 3/4 of the shareholders holding at least 3/4 of the shares of that particular class have to give written consent or special resolution. All right. So answer is option C. Question number 5. Again, a very simple question. You can simply read and give me the answer. Public company may be formed by how many people? 7 or more persons, right? 1-person company, 1 member. Private company, minimum 2, maximum 200, excluding past and present employee members. And public companies, minimum 7 members, maximum no limit. So this is it with the MCQs. MCQs, you must have noticed, not extremely difficult as such. Let us go to the descriptive part now. Let us handle the questions one by one. We'll quickly run through the questions. Geeta Private Limited is a startup company. Mr. Pramod has been appointed as accounts manager of Geeta Private Limited. A board meeting for approval of accounts is to be held on 1st August 2022, and he has to prepare the financial statements for approval by the board. Referring to Section 2, Clause 40 of the Companies Act 2013, advise Mr. Prabodh about the statements that are required to be prepared. Startup company, financial statements. Advise Mr. Prabodh about the statements that are required to be prepared. You tell me, first of all, financial statements include what components? If you look at the definition of financial statements, it says financial statements includes. What does it include? Number one, balance sheet. Number two, P&L account. Number three, cash flow statement. Number four, statement of changes in equity. Number five, the notes, explanatory notes. But do you remember learning cash flow statement is not required for some companies? For which companies is cash flow statement not required? It is not required for 1% company. Then it is not required for small company. Then it is not required for dormant company. And it's also not required for those private companies which are recognized by DIPP as startups. And this question here talks about a startup company. It's a private company. It's a private company, startup company. So what will your answer be? What will Prabodh have to prepare? He has to prepare everything else except cash flow statement. He have to prepare balance sheet, P&L, statement of changes in equity and notes to accounts. He doesn't have to prepare the cash flow statement. All right, a very tiny point they're testing over here. What if this company was Geeta Limited? Would your answer still be the same? No, only for private companies which are registered as startups, only for those private companies, you have the exception, you have the concession. Public companies, no concession. They, even if they are startups, they have to fulfill all the 5 points. They have to make all the 5 points. One small point I made over here, I hope you noticed. Financial statements definition is an extensive definition. It says financial statements includes. Okay, it's an extensive definition. Then going to the next question. Mr. Aditya had incorporated a 1% company on 7th July 2021. Mr. Yash was named as a nominee in the MOA of the said 1% company. Now, Mr. Aditya, considering the perpetual nature of company form of business, desires to appoint ABC Private Limited as a nominee instead of Mr. Yash. Examine with reference to Companies Act 2013 whether the proposal of Mr. Aditya to appoint ABC Private Limited as a nominee is valid. What do you think, guys? Can we appoint ABC Private Limited as a nominee? No. You remember learning in 1% company about who can be member, who can be nominee? What did we learn? Let us run through quickly. Member or nominee, both we said they should be natural persons. They should be majors. They should be an Indian citizen. And they should be a resident. Choose the wrong option here out of the 4. Which of the 4 is the wrong point? Resident. Resident, not necessarily. You may be a resident or you may not be a resident. It doesn't matter. But you should be a natural person. You should be a major. You should be an Indian citizen. But here in our question, we want to appoint whom as the nominee? ABC Private Limited, a company. A company is an artificial person. Artificial person cannot be a member or nominee. Only natural persons can be members or nominee. So that is why the decision is clearly wrong. This question is fine, but there's one more thing I want to discuss with you. See, remember, let me take an example. Let us say I start an OPC, Anushree OPC Private Limited, and another company, Reliance Industries Limited. Can Reliance Industries Limited be a member or nominee of my OPC? Not allowed, artificial person cannot. But can my OPC be a shareholder of Reliance Industries Limited? What do you think? Can a 1% company invest in the shares of another company? No. A 1% company cannot invest in the shares of another company. You must have learned what are the things a 1% company cannot do. 1% company cannot do any NBFC activity, remember? It cannot do NBFC activities. It cannot do finance activities and all. It also cannot invest in shares of another body corporate. So neither can we invest in shares of another company, nor can another company be our member or nominee. Both not allowed. This is one point which not many of you are aware of. I hope this was a good learning for you all. Right? Even one person company cannot be a shareholder of another company. Another company also can't be member or nominee of the OPC. Both are not allowed. Perfect understanding? Can I take you to the next discussion now? This was question number 2. Let's go to question number 3. A simple question. A and his wife B have joint demat account in Vrinda Limited. Company's AGM is to be held on 28th February 2022. Who will cast the vote in the AGM? Give your answer as per the provisions of Companies Act 2013. Very simple point about joint shareholders. You tell me, who will cast his vote? If we have joint shareholders, if any one joint shareholder only is present, whoever is present, that person will vote. But what if both of them are present, A and B? We will see who is the senior most shareholder. How will we decide senior most shareholder? How will we decide seniority? On the basis of age? No. We will see whose name is appearing first in the register of members. Whoever's name appears first, that person becomes a senior most shareholder. That person will get the right to vote. In case voting is happening by poll, we will give polling paper to which joint shareholder? The senior most joint shareholder. Can A and B decide whose name should be written first? Yes, they can decide, they can tell the company. Let us say together they have 100 shares. Can they decide for 40 shares, A's name should be written first, then B's shares, then B's name, and for 60 shares, first B's name should be written and then A's name? Can we decide like this? Yes, this is allowed. This is nothing but splitting of votes. This is allowed. They can decide that for some shares, A's name has to be written first, and for some other shares, B's name has to be written first. They can split their shares like this, allowed. A simple question, question number 3. Now let's go to question number 4. Question number 4 targets e-voting discussion. Let us see the question. Prabhas Limited is a company having shares listed on a recognized stock exchange. So which means I can say this is a listed company. It has 5,000 members. AGM of the company is to be held on 7th September 2022. As per the provisions of Companies Act 2013, advise the company the remote e-voting period and the time of closing of remote e-voting. Two things they're asking us. What is a remote e-voting period and when should the remote e-voting be closed? First of all, electronic voting is mandatory for which company? Is every company required to provide e-voting facility? No. It is mandatory, number 1, for listed companies. And which else company? Any other company which has at least 1,000 members. At least 1,000 members or more than 1,000 members? Could you please correct my answer? It has to be at least 1,000 members because the law says not less than 1,000. So even equal to 1,000, you need e-voting facility. Okay, so every listed company and every company which has at least 1,000 members, it is mandatory for these companies to provide e-voting facility. Now tell me, the e-voting period has to be minimum how many days? Minimum, it has to be open for minimum 3 days, right? And when should it be closed? Do you remember? It should be closed preceding day. What time? It should be closed on the preceding day at 5 p.m. This is what we have learned. Now, when are we going to hold the meeting? 7th September. So 7th September minus 3 days is going to be 4th September. So this is when the remote e-voting period should be opened. Is this right? Or 7th September minus 3 days, which is 4th September. But it should be 3 clear days, which means I have to ignore the date of opening and the date of meeting, which means I should subtract 1 more day, which is 3rd September. Which of the 2 options is right? It is 4th September. Do we talk about 3 clear days here and all? No. We just say that the remote e-voting period should be opened at least 3 days before the meeting. That's all. We don't say 3 clear days. So 3 days before the meeting would simply be 7th September minus 3 days, 4th September. All right. And you tell me, when should we close the remote e-voting now? When, which date, what time? We're going to hold the meeting on 7th September. So what will the preceding day be? 6th September. So 6th September, 5 p.m., we should close the remote e-voting facility. Once it is closed, can any person cast his vote thereafter by electronic voting? No. But remember, we learned, if you're not able to cast your vote electronically, no problem. You can still come to the meeting. In the meeting, the scrutinizers will help you vote. How? Either electronically or through poll. Right? So this was our discussion regarding the fourth question, e-voting. Remember, e-voting applicable mandatory only for listed companies and companies which have at least 1,000 members. The remote e-voting period should be open for at least 3 days before the meeting. It should be closed on the preceding day at 5 p.m. That's it. Okay, can we go to the fifth question now? Can we go to the next question? Let's go ahead, guys. Question number 5. Demon Limited is a company incorporated in India. So, Indian company. Demon Limited is a leading manufacturer of sports shoes. It has many subsidiaries, one of them being Best Shoes Limited, which is based in Morocco. So it looks like it has a foreign subsidiary. Demon Limited is a company incorporated in India. Demon Limited is a leading manufacturer of sports shoes. It has many subsidiaries, one of them being Best Shoes Limited, which is based in Morocco. So my company Demon Limited, I can say it has a foreign subsidiary. Do you remember the rules and regulations regarding foreign subsidiary in your accounts of companies chapter? In case their financial statements are in foreign currency, what are you supposed in case their financial statements are in a foreign language, what are you supposed to do? Convert it into English, translate it into English. And what if in that particular country audit is not required? Then it's okay. Even unaudited financials we can consider. Then what if their accounting policies are different, format is different? As much as possible, we should try to align. As much as possible, we should try to align the format, and we should, as much as possible, we should try to align the accounting policies. If it is not possible, we should disclose with required reasons. That is what we have learned about foreign subsidiary. Now let us read the question. Demon Limited is in the process of finalization of consolidated financial statements of the company. Obviously, it will prepare CFS because it has a subsidiary. Account section of Demon Limited has requested the management of Best Shoes Limited to provide standalone financial statements to Demon Limited. Subsidiary company prepares its financial statements in the local language of the country, and the same is provided to the Indian parent company. Audit of financial statements is not required by Best Shoes Limited under the Moroccan law. Now, what will you say? What will your answer be? What about the language part? The language part, we will say no problem, simply translate into English. You can't distribute financial statements in Moroccan language. Nobody will understand. So for the benefit of your shareholders, for the benefit of your stakeholders, translate the financial statements into English and then do the CFS. Then what would your answer be about the audit part? Audit of financial statements is not required by the Best Shoes Limited under the Moroccan laws. So they are unaudited financial statements. It's okay. We can even use unaudited financial statements if the foreign subsidiary, according to the foreign laws applicable to the foreign subsidiary, if audit is not mandatory, then we can use the unaudited financials itself. But as much as possible, we should try to align the format. As much as possible, we should try to align the accounting policies so that same format, same accounting policies are followed by the holding company and by the subsidiary company. If it is not possible to do this alignment, then we must disclose the deviation along with reasons for the deviation. That's it. These 3 points will be your answer. That's it about the 5th question. Now coming to the 6th question, debenture trustee. What are the provisions of Companies Act relating to appointment of debenture trustee? When is debenture trustee required? More than how many copies? I mean, more than how many prospectus? Does any number come to your mind? more than 500. If you're going to issue the prospectus to more than 500 people, then we will need debenture trustees, right? And these debenture trustees, they are going to work in the best interest of the debenture holders. From the debenture trustee, we need a written consent that they're willing to be appointed as debenture trustee. We have to make a debenture trust deed with the debenture trustee. Remember, they're asking whether the following can be appointed as debenture trustee. A shareholder who has shares of 10,000 rupees, tell me, can a shareholder be appointed as a debenture trustee? No. A shareholder can't be appointed as a debenture trustee. The law says any person who is beneficially interested in the shares, any person who is beneficially interested in the shares cannot be a shareholder. So here the question says he's a shareholder. Shareholder can't be appointed as debenture trustee. Beneficially interest is nothing but my name is not there in the register of members, but I am the beneficial owner of the shares. Even I can't be appointed as debenture trustee. So shareholder can't be appointed as debenture trustee. But in case, and let me give you an example, otherwise I think that will be easier for us to understand. Two people in a story, green and blue. Green's name appears in the register of members, which means Green is a shareholder of the company, he's a member of the company. Blue, he is the beneficial owner of the shares, which means he is the one whose name is not appearing in the register of members, but he is the one who enjoys the benefits of the shares. In a situation like this, who can be appointed as debenture trustee and who cannot be appointed as debenture trustee? In such a case, the person who has beneficial interest cannot be appointed as debenture trustee, but Green can be appointed as debenture trustee. Okay. Now, situation 2. No beneficial owner and all. This Mr. Blue, he only is a shareholder of the company. He only is a member of the company. His name appears in the register of members. He is the one who enjoys benefits of shares. No beneficial owner and all. Now, can Blue be appointed as debenture trustee? No, Blue cannot be appointed as debenture trustee. Now clear? Yes. So any person who has beneficial interest in the shares, that person cannot be appointed as a debenture trustee, but the other party, the registered owner, he can be a debenture trustee. In case this sort of a relation doesn't exist, then the shareholder can't be appointed as debenture trustee. Here the question doesn't talk about beneficial interest and all. Hence we will assume the situation falls under this. So can shareholder be appointed as debenture trustee? No. Can a creditor be appointed as debenture trustee? Any person who owes money to the company, any person to whom the company owes money, these people cannot be appointed as debenture trustee. Amount, is that relevant to us? No. A person who has given a guarantee for repayment of amount of debentures issued by the company. This means what? A person is saying, no, don't worry, debenture holders. If company doesn't repay, I will repay. He's any person who's giving a guarantee that company will repay debentures. If company doesn't repay, I will repay. Can he be appointed as debenture trustee? Of course not. Any person who's giving any guarantee about repayment of debentures, that person also cannot be appointed as debenture trustee. All right. So these three people, none of the three can be appointed as debenture trustee. Now coming to the seventh question. State the persons responsible for complying with the provisions regarding maintenance of books of accounts. Who are the persons responsible for maintaining books of accounts? Do you remember? Just the other day, we were revising this. 4 people, right? Number 1, managing director. Number 2, whole-time director. Number 3, the chief financial officer. And number 4, any other person who is made in charge by whom? Any other person who is made in charge by board of directors. Any other person authorized by the board of directors to take care about this responsibility. So managing director, whole-time director in charge of finance, CFO, any other person made in charge by the board to comply with the relevant provisions. That's question number 7. Even this was straightforward. Listen to question number 8. This is simple from the auditors chapter. Mr. Govind Ram is a partner and in charge and certifies financial statements of P and Associates. He's a partner, which means I can say P and Associates is a partnership firm. The firm P and Associates is appointed as an auditor firm of Kanha Limited, a listed company. Mr. Govind Ram retires from P and Associates. After some time, joins Gupta and Gupta firm as partner on 20th May 2022. In the general meeting of Kanha Limited held on 15th June 2022, company appointed Gupta and Gupta firm as next auditor of the company. Advise Kanha Limited whether the company has adhered to the provisions of Companies Act 2013 by appointing Gupta and Gupta as auditor of the company. Nothing but the rotation of auditors concept, right? If P and Associates, if their term is over, if their tenure is over, cooling period of how many years, tell me? 5 years cooling period. In this cooling period, can I appoint P and Associates as auditor again? Of course not. Can I appoint any other firm in this cooling period which has a common partner? I can't. There you have your answer. Gupta and Gupta has a common partner, Govind Ram. Gupta and P and Associates. P and Associates is a retiring auditor. P and Associates and Gupta both have a common partner, Govind Ram. In the cooling period, neither P and Associates nor any other firm which has a common partner, they cannot be appointed as auditor of the firm. All right. By the way, does this concept apply to listed companies? Yes, it does, right? This concept about cooling period and all, it does apply to listed companies. So because we have common partners, neither can P and Associates nor can Gupta and Gupta, neither of them can be appointed as auditor during the cooling period because of common partner. All right, guys. So this is it about the questions regarding company law. What were our major learnings here? Our first question was a revision about financial statements. Our second question was a revision about one-person company. I think here we had something really solid to learn. Question number 3 was about joint shareholders. Question number 4 was about e-voting. All right. Remember 3 days, preceding day 5 p.m. Fifth question was about foreign subsidiary. They were testing us a very specific point. Question number 6 was about debenture trustee. I think the beneficial owner part might be a good learning for some of you. Seventh question was about who will maintain the books of accounts. And the 8th question was about the auditors. Okay. Shall we go to the 9th question now? Shall we go to the other laws part now? Let's go to the 9th question. 9th question is very similar to a question which you would have seen in my book as well. Read the question. As soon as we read the question, your answer should be ready. Vishal bailed 50 kg of high quality sugar to Naresh, who owned a kirana shop, promising to give 200 rupees at the time of taking back the bailed goods. When Naresh was not at shop, his employee, unaware of the bailed sugar of Vishal, mixed the 50 kg of sugar belonging to Vishal with the sugar in the shop and packaged it for sale. This came to light only when Vishal came asking for the sugar he had bailed with Naresh, as the price of the specific quality of sugar had trebled. What is the remedy available to Vishal as per the provisions of the Indian Contract Act 1872? Which concept comes to your mind? Duty of the bailee. It is a duty's bailee to not mix the bailed goods. Bailee, first of all, don't mix the bailed goods. But no, bailee has mixed the bailed goods. Now what will you check? You will see, okay, bailee has mixed the goods. Are they separable? Is separation possible? Yes, they are separable. In that case, what will your conclusion be? Separate the goods. Separation expenses, who will bear? Separation expenses, bailee, you only will bear. But if they are not separable, like in this case, high quality sugar was mixed with other sugar, is it possible grain by grain to separate the sugar? It is not possible. So when it is not possible, then what do you treat it as? If separation is not possible, we will treat as if the entire sugar is lost. We will treat as if there's a huge loss, as if this entire sugar is gone. The entire value of the sugar has to be borne by the bailee. Right? So first of all, bailee, you have a duty. Don't even mix the goods. What were the other duties of the bailee? Tell me the first duty of the bailee. He should take utmost care of the goods, like a man of ordinary prudence would take care of his own goods. Second duty of the bailee, tell me. He should not make any unauthorized use of the bailed goods. Number 3, third duty, he should not mix the bailed goods. And fourth duty, once the purpose is over, once the period is over, he is supposed to return the bailed goods along with PIA, along with profits increase and accretions, along with profits increase and accretions. Key word I want. Without dash. What is it? Keyword. Without demand. He's supposed to return this without demand. Right? So these are the 4 duties. Here we are focusing on the third duty. Bailee shouldn't mix the goods. But no, bailee has mixed the goods. If he has mixed the goods, we will check, are the goods separable, not separable. Remember the cotton bales example? There it was separable. If it is separable, separation expenses bailee itself will bear. But if they are not separable, then it will be as if the entire goods gone, as it is a huge loss, and the entire value of the loss has to be borne by the bailee. So what is the remedy available to Vishal now? What can Vishal do? Vishal can sue the value, Vishal can sue the bailee, Vishal can sue Naresh for the value of the goods. Naresh will have to compensate Vishal for the loss of sugar, for the entire value of sugar. Right? So this was our 9th question. Then coming to the 10th question. 10th question is an interesting question. Mr. Zahid accepted a bill of exchange and gave it to Mr. Kamal for the purpose of getting it discounted and handing over the proceeds to Mr. Zahid. What is this? The question doesn't focus much on the first sentence, but I want you to understand what exactly does this mean. Mr. Zahid accepted a bill of exchange. So which means Zahid is the acceptor of the bill and he gave it to Mr. Kamal for the purpose of getting it discounted. What is Kamal going to do? See, Zahid has given a bill of exchange to Kamal. So which means for Kamal, money is receivable. Right? Kamal has a receivable. He has a bill of exchange accepted by Zahid. Do you all agree? Zahid is giving a bill of exchange to Kamal. Kamal is a holder of bill of exchange, which means he has the right to receive money. But then, what is Kamal going to do? He's going to go to the banker. He is going to discount the bill of exchange with the banker. The banker will give him money and Kamal is going to give this money to Zahid. Does any concept come to your mind? Why did Zahid accept this bill? To raise money on the bill. Can't I call this as an accommodation bill? There is no consideration here. Kamal did not get the bill from Zahid because Kamal sold any goods to Zahid. Zahid is accepting the bill to raise money for himself without any consideration, with the objective to raise money. Accommodation bill, guys. Accommodation bill, can the parties sue each other? No. Then can the parties sue? Only once consideration enters the story. Only HIDC can sue in an accommodation bill. Able to recall? Then Mr. Kamal couldn't get the bill discounted. So he couldn't get the bill discounted. He returned the bill to Mr. Zahid. Mr. Zahid cut the bill in 2 pieces for the purpose to cancel it and he threw the pieces on the street. Mr. Kamal picked up the pieces, joined those pieces in such manner that the bill seemed to have been folded for safe custody rather than cancelled. Tell me, Mr. Kamal, does he have good title? No, right? He does not have good title. He has no right to keep the bill. He has done a fraud here. Mr. Kamal put it into circulation. Finally, it reached Mr. Salim, who took it in good faith for value. Let's assume before maturity. What will you call Mr. Salim? You will call him HIDC. Explain in the light of the provisions of Negotiable Instruments Act whether Mr. Zahid is liable to pay the bill to Mr. Salim. What will your answer be? Can HIDC claim the money? Yes or no? Yes, he can. There are only two situations where HIDC does not get the money. What are the two situations? Number one, when there is forgery, and number two, when the bill is marked not negotiable. Right? Any of the two situations here. Is it a check mark not negotiable? No. Is there a forgery? No. Which means HIDC, good title. HIDC's title does not depend upon the title of the transferor. Even if the transferor's title is bad, HIDC's title is still good. So HIDC has good title. HIDC can recover the money from Zahid. Zahid can later obviously file a case against Mr. Kamal. The first sentence over here does not have any relevance to our question. But I was just discussing it with you in case something related to this comes in the examination. You should know that this is an accommodation bill, right? You understood why? Did you understand the reason why it is accommodation bill? Guys, don't give me the silent treatment. It scares me. Right? See, listen, it was an accommodation bill because Zahid accepted the bill, gave it to Mr. Kamal. Kamal went to the banker, discounted the bill with the banker, got money and gave it to Zahid. So did Zahid accept the bill because he had any liability and all? No, there was no consideration. He had no liability. He still accepted the bill. Why? Because he wanted to raise money for himself. Without consideration, just to raise money, we call it as accommodation bill. Perfect understanding now? Fine. Come to question number 11 now. Let me see if you're able to recall this concept. General Clauses Act. Section 2, Clause 18, Subclause AA of Income Tax Act 1961 provides that a company is said to be a company in which public are substantially interested if it is a company which is registered under Section 25 of Companies Act 1956. After the advent of Companies Act 2013, the corresponding change has not been made in 2 Clause 18 of Income Tax Act 1961. Explained with reference to the provisions of General Clauses Act 1897, how will the provisions of 218AA of the Income Tax Act 1961 will be considered after the enactment of Companies Act 2013? Does any section come to your mind? What has happened here? Companies Act 2013 has been repealed. Companies Act 1956 has been repealed, and in its place Companies Act 2013 has been reenacted. But then Income Tax Act still in some places refers to Companies Act 1956. But even though Income Tax Act is still referring to Companies Act 1956, you know, we will read it as if it is Companies Act 2013. It will be interpreted as if it is Companies Act 2013. This you guys have perfectly answered. But tell me, which section number talks about this? Section 8, right? Section 6 talks about repeal and Section 8 talks about this reenactment. Even though Companies Act 1956 does not exist anymore, still Income Tax Act in several places talks about Companies Act 1956. We should interpret it as if it is Companies Act 2013. That's a simple question. Question number 11. Then finally coming to question number 12 relates to something which only yesterday we had written the answer to this. How will you interpret the definitions in a statute if the following words are used in the statute? Means and includes. You tell me, as soon as I put the word means in the definition, what does it become? It becomes an exhaustive definition, also called as restrictive definition. If I put the word includes, then it's going to be an extensive definition or an inclusive definition. Who is saying imperative? You're mixing up. Anuruba, imperative is the word which we use for shall. Mandatory, imperative, that is interpretation of the word shall. Interpretation of the word may is directory or enabling, right? Here we're talking about means and includes. Means exhaustive definition, includes extensive definition. Do you remember the key word I told you in includes? What kind of scope? As soon as I put the word includes, the definition has a wide scope, right? You remember the entire answer we wrote? We will write how the definition will not only include the points which are written in the definition, it will also include other things. Whenever the definition has the word includes, it only gives us examples of the meaning. It's not restricted to that meaning. But when we use the word means, the meaning of that particular word is restricted to the definition given. They're asking us one illustration for each. One illustration for means. Can you give me one example for a definition with the word means? Company. Company means any company incorporated under this act or any earlier existing company incorporated under any earlier law. And includes, any definition for includes, just now we saw some time back. Financial statements. You can give definition of financial statements. Then you can give the definition of person under General Clauses Act. What is the definition of person under General Clauses Act? Person includes cab. Who are the three people? Person includes company, then any association or any body of individuals. Remember, cab, right? So you can give that definition also under includes. For means, you can give example of company definition. For includes, you can give an example of the person definition, person under General Clauses Act, or definition of financial statements. You can give these definitions. All right. So with this, the RTP of your November 2022 examination has been discussed entirely in full depth. I think even you must be feeling that the questions were not too difficult. Bearing one or two here and there, I think it was more or less okay, right? So, especially the MCQs, we were able to handle them pretty easily. So with this, we come to an end to this session, guys. I think it was a pretty extensive discussion of the entire RTP. I'll try discussing the RTP for income tax also with you guys very soon. You'll find that either on my YouTube channel, or probably we'll do a live Zoom session. We'll see how we can do the income tax RTP also. And once the MTPs are released, we'll discuss them as well. So shall we close this session here?